Enphase Energy is gaining traction in trader discussions as speculation builds over a potential short squeeze in the backdrop of what many see as an undervalued solar sector. Bulls argue that high short interest, coupled with signs of sector wide recovery, could trigger a sharp upside move if momentum builds. Some point to recent price stabilization as evidence the stock may have already hit its bottom, while others remain wary of its prolonged downtrend, macro headwinds, and questions surrounding management execution. The company recently unveiled its most powerful home battery to date, the IQ Battery 5P with FlexPhase for the Australian market. With a 5 kilowatt hour storage capacity that can be scaled to 70 kilowatt hours, the product is being marketed as a flexible, high performance energy storage solution for residential use, aligning with growing global demand for home energy independence. Broader clean energy sentiment has improved notably in the past month, with the Invesco Wilder Hill Clean Energy ETF rallying 14%, despite a new tax law eliminating credits the sector has historically depended on. However, that rally faces a looming policy risk. President Donald Trump has urged the Treasury Department to adopt stricter rules on renewables, which Jefferies analyst Julian Dumoulin Smith warns could spark a day of reckoning for renewable tax credits as early as Monday. Should the Treasury tighten regulations, Bloomberg New Energy Finance estimates 2,500 clean energy projects, equivalent to the output of 383 nuclear reactors, could be jeopardized. Alongside Enphase, other potentially impacted stocks include Next Era Energy, NEE, Sunrun, RUN, and SolarEdge, SEDG. This mix of sector optimism, policy uncertainty, and technical trading setups is fueling both bullish and bearish bets on NEPH in the days ahead.
Okay, so the stock is in the move, up 14.46%. This is Friday, the 15th of August. Higher prices are expected to remain in place up till Friday, the 22nd. This is a long time to come. There's no guarantee that this will be the case. And we have a couple of projections. We have 40.13, 44.04, 46.46 currently prevailing right now. Let's see. The stock underlying trend is a bearish one. The stock just started to pick up strength as of Thursday the 7th, exactly a week 6 days, 6 trading days ago. It actually maybe dipped one day out of those 6 days. Okay, so here we have the 10-day moving average is still is in a strong trend mode. However, everything, including the 21-day moving average, is bearish. So indicating that the stock is not out of the woods yet. We can just quickly apply the 20 the price pressure momentum of the 40 and the 200 day moving average. It's just going to give us a complete picture. The This is the 40 and this is the 200 day moving averages. So let's see what they're saying down here. So they are equally all bearish. The 21-day moving average, the 40-day moving average is okay, not bearish, but not even maintaining. It's just coming out of being severely bearish. The 200-day moving average is also severely bearish. So a lot has decayed since on the stock. There's no foundation on its underlying trend. This is its underlying trend. It was totally weak. There's no basis there. If the ch- if the stock reverses, this will not give it any support. This is not encouraging for the stock at all. So let's reapply the 10 and 21 period day moving averages, and we will go to the 4-hour chart. The stock, obviously, you can imagine, has even way more way more room to the upside, way more room to the upside. We're talking about 78.69, way more room to the upside. So yeah, way more room to the upside, a lot more to the upside. Okay, so um, here the extrapolation is saying that by Monday it will okay, by this post market session it might get a rejection and then go into a distributive contraction. After that there might be a bounce, but once again these are just extrapolations. Maybe this for today's post market session it may hold, but after that by Monday there's no guarantee that that will be the case. Here currently we have downward projections not into the upside currently prevailing on its 4-hour chart, but not very long ago, as of yesterday's pre-market session, if you like, there was just nothing very much to the upside as well. Just nothing, yeah, that's 38.25, 39.28. Not really that ambitious. I think you can be talking about sometime as of Wednesday, 6th. That's when we had things like $43 or thereabout. Here we can see what are the indicators. What's the price pressure okay, here the price pressure momentum is severely, strongly in a strong trend mode. All the derivatives are all bullish, all positive, because this 4-hour chart is, it magnifies the tip, if you like, the last couple of hours on the stock itself. And also it's also active when the market is closed, so it keeps on accumulating data. The daily chart is only active when the market opens. So here we can see a bigger picture, because the market is also active when the market is also active when the market is closed. Yeah, the stock is also active when the market is closed. So this gives us a different picture. If you like, you could say better picture. So it's a different picture as well. Yeah. So yeah, you can clearly see here. It looks like it's looking better here. If you like, on the line trend here is also bearish, but it could be reversing if more strength comes in. So just have a look and see what you make of EMPH, and I'll continue to update you. Thank you very much for watching this video.